Let's talk about something that makes most people really nervous: market crashes. We're going to completely flip the script on how you see them. I promise, by the end of this, you'll see a market dip not as a reason to panic, but as one of the best opportunities you'll ever get to build real, long-term wealth. Let's dive in.
You know that feeling, right? You check your phone, and it's just a sea of red. Every news channel is screaming about a crisis. And your gut instinct? Well, it's fear. It's that sinking feeling that tells you to sell, to get out before things get worse. It honestly feels like the sky is falling.
But imagine, in the middle of all that chaos, there's a group of people who see that same red screen and smile. They feel a sense of calm, maybe even a little excitement. These are the SIP investors. They know a secret about how the market really works, and today, we're going to let you in on it.
That whole secret? It's captured perfectly in this one line from Warren Buffett. Just think about it in your everyday life. If your favorite pair of sneakers, the ones you've been eyeing for months, suddenly go on sale for 40% off, what do? You get excited, you buy them, right? Investing in great companies should be exactly the same.
That brings us to the first big shift in mindset. We need to stop seeing the stock market as some scary, unpredictable beast. Instead, think of it like a giant supermarket full of high-quality goods. And a market correction? Well, that's just the store announcing a massive, site-wide sale.
Let's just redefine this term right now. A market correction is not a disaster. It's a discount. Simple as that. It's a temporary window of time where fantastic, solid, long-term investments are being sold for cheaper prices. And the best part is, you get to buy more of those great assets for the exact same amount of money you were already planning to spend.
Okay, so the big question is, how do you take advantage of this sale without trying to perfectly time the market, which is, basically impossible? Well, the good news is, if you have a systematic investment plan, an SIP, you already have the perfect tool in your hands. It's your secret weapon.
You see, your SIP is so much more than just an automatic monthly payment. It's a really powerful system that combines three incredible forces. First, it gives you built-in discipline. Second, it lets you harness the magic of compounding over years and years. And third, and this is the key for today, it actually turns market volatility, the very thing everyone's afraid of, into your single biggest advantage.
Let me show you how with a super simple example. Let's say you invest 10,000 rupees every single month into your favorite mutual fund. Now, when the market's doing great and everything's up, the price, or NAV, of one unit of that fund might be, say, 200 rupees. But during a correction, that same unit, well, it might drop down to 140 rupees. Your investment is the same, 10,000. But the price of what you're buying has changed a lot.
And here's where the magic happens. Look at this. At that higher price, your 10,000 rupees bought you 50 units of the fund. But at the lower sale price, that very same 10,000 rupees gets you more than 71 units. You automatically bought more shares, more ownership for the exact same money. That's it. That's the power of rupee cost averaging. It's your SIP's superpower.
And this brings us to a simple, almost beautiful mathematical truth. The more units you can stack up while the prices are low, the more your portfolio is going to be worth when the market, as it always does, recovers. Every market dip is just a golden opportunity to collect more units for cheap.
So, if the math is this simple and this powerful, you might be wondering, why isn't everyone rich? Well, it comes down to one critical emotional mistake that almost everyone makes right when the opportunity is at its absolute peak.
And there it is, the single biggest wealth-destroying mistake you can make. When the market falls, fear kicks in, and that little voice in your head says, "Stop the bleeding, pause the sip." You think you're protecting yourself, but what you're actually doing is abandoning your strategy at the exact moment it's designed to work its magic for you.
The cost of that one little click, the pause button, is just staggering. Seriously, studies have shown that people who just keep their sips going through the downturns can end up with a final portfolio that's 40 to even 70% bigger than those who panicked and stopped. It's like walking out of the supermarket just as they're about to announce the biggest discounts of the year.
But, I hear you say, how do we know the market will come back? It's a fair question. But we don't need a crystal ball for this one. We just need to look at history. It gives us all the confidence we need to stay calm. Just look at the last 20 years. We've lived through the 2008 global financial crisis, major economic slowdowns, a once-in-a-century pandemic, geopolitical wars. I mean, each one of these felt like the end of the world at the time, right? And yet, what happened after every single one of them? The market didn't just recover, it went on to hit new all-time highs. History's lesson is incredibly simple. The market is resilient. So, now that we know all this, what do we actually do when the next correction hits? Because it will.
Luckily, the plan is really simple. You just need a clear 3-step playbook to follow.
Here are your 3 golden rules. Number 1, and this is by far the most important, stay invested. Whatever you do, do not let fear convince you to hit that stop button. Number 2, stay disciplined. Trust the plan, keep investing in the good, solid funds you chose for a reason. And finally, number 3, stay opportunistic. This one's a bonus. If you have some extra cash, consider topping up your SIP to buy even more units while they're on sale.
I want you to burn this idea into your brain. Market corrections are not the enemy. They are not something to be feared. For a disciplined long-term investor like you, they are the very foundation upon which your future wealth is built. These are the moments that make all the difference.
Because make no mistake about it, the next correction is coming. It's not a matter of if, but when. It's just a natural part of the cycle. But now you have a choice. When it arrives, are you going to see fear? Or are you going to take a deep breath, remember the sale, and see it for what it really is, a friend helping you build your wealth one discounted unit at a time?